Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we're going to do an update to the Las Vegas real estate market for June.
Yay.
We just got brand new data. Before we do it, though, Juana, what is our 48-hour guarantee on all of our videos?
Okay, so Todd guarantees that for the first 48 hours, we are not going to have commercials on the videos. After that, when and if he remembers, he will turn the commercials back on.
I don't have too much control. YouTube actually controls the videos. All I got to do is turn them on or off. It's
okay.
Pretty much how it goes. Okay, so we're going to jump right into Las Vegas real estate data. We'll come over here first, Market Action Index. If you watch the channel, you've seen this before. We didn't make up this. This is from Altos Research. Anything over 30 is a seller's market. Anything under 30 is a buyer's market. I don't know why they did it that way, like I said, but they're seeing slight seller's advantage. The highest I've ever seen is like 80 or 90, but that was like the hottest market ever. Half of the homes, at 90, half of the homes sold in a day. Do you remember that?
I do.
Half of the homes were gone the day they were listed. Okay. Now we're going to do is flip over here, real-time market profile. Now this is June. Juana, June is basically pretty much the end of the buying season. Now we're transitioning into slower times. Inventory tends to go up or go down over the next few months.
Inventory will go up.
Inventory will go up. And depending on how many buyers there are, home prices will generally either stays the same. We did have 2 years of the last 4 where it went up. Not that generally doesn't happen. It usually goes down. And what we're seeing now here is the median list price you can see is basically roughly what it was. Median price new listing is roughly what it was. Price per square foot is bouncing around. No significant up or down. It was up for a couple weeks and it was down. Last week, 280 still, we've got the whole like 5-year shot of this to give you an idea. Average days on market, median days on market have basically probably stopped getting shorter. They'll probably stay the same, go back up. 49 days on the market for a median, that's like a month and change. Is that historically pretty reasonable? Everyone got used to 7 or 14 days.
So it's still, homes are still moving relatively fast. Remember, most homes take 4 to 6 months to sell, and that means most, not all, which means lots of homes don't sell in 4 to 6 months. They take longer. Of course, some take a little bit less. So that's kind of what we aim for, 4 to 6 months. We're at a point where the market is returning to pre-pandemic patterns. So what does that mean? It means that we're looking at longer times on the market, buyers having more choices, and everything just slowing down a little bit. Not slowing down in the sense of economics, but more in just the pace of things. It's more what real estate was prior to 2020.
Yeah, as you can see on this too, inventory is starting to creep up. We're going to slip over here to the price per square foot chart. This looks back a little bit because this is closings in the last week. So this gets updated every week. I went 7-day average, which just grabs the last 7 days. It's not a smoothed out chart. It can be herky-jerky. And you can see the last 3 years have been pretty steady, just kind of creeping along. A lot of this is inflationary. If you actually go back 5 years ago from then to today, and you could draw a straight line, it's gone up pretty much with inflation. There was a little bump there, which was when interest rates were still really low and people knew that they were coming to an end, and there was some panic buying, pushed prices up artificially. Kind of realistically, I kind of see October, November, December as being the best months where I think there'll be more inventory and maybe not as many buyers. I think people will have a choice. I think if you had the decision between to list your house today and list it in 4 or 5 months, what would you like? Would you rather list it today or wait 4 or 5 months?
I personally would just rather list it today and get on with my life, but that's just me.
Okay. All right. Remember, if you're listing your house, price has to be market price. We are not in a market where stuff flies off the market so fast you can just set any price and
right. Homes are selling for market value, which means that if you price your home optimistically, aspirationally, then your home is still going to be your home. No one else will want to participate in that. If you price your home for what the market will support, then your home will sell. That's a pretty straightforward thing. And honestly, it doesn't matter what the market's doing as much as is your home positioned properly in the market? Is it priced at a point where it will sell? I appreciate that everybody thinks that their home is fantastic and that they're looking for that 1 in a million buyer. Well, then you're leaving out those everybody else. So if you're going to narrow your sights for just that one buyer, then you may hang on to your home longer than you expected.
Okay, inventory. Now, remember, this only goes 5 years. I don't control the chart. Altos, this is all they let us do on this. This is the highest inventory we've had June 2nd, which is when this date is from, in the last 5 years. Mm-hmm. If you go all the way back to 5 years, it was basically the same. This was the magic COVID year, but inventory is actually starting to drop here because people were buying houses, which was a different. We're in a different phase. It was kind of a little funky time there, but this is the highest. However, if you went back to 2018, 17, 16, inventory is about where it's supposed to be for this time. Are we going to get to 5,000 or 6,000? Yeah, probably. Could we go above that? Probably. Historically, where would that put us, Juana? If we had 5,000 or 6,000, if we had 6,000 listings in October, November, which is the peak when it should probably start dropping again.
That would be pretty normal. I mean, look, we're a big market. There are 2.5 million people in Southern Nevada. So that's not a lot of homes for that many people.
Okay, this is market segment. Now, this is really important. This is just the last 7 days. This is 7 days, okay? You have the 4 segments of the market by quarters. So the top and then middle, 2 middles and the bottom. Then the median price of the top is 1.33 million, then about 700, 520, and 400, right? This is what's interesting. The top quarter of the market, in the last week, there were 70 new homes that came on the market. But 69 sold in the same time. So we only increased inventory by 1. And then in the next one, there were 92 new, but 90 absorbed. Not those of the 92. There were 90 total from the population. These are just at pluses and minuses, right? The bottom half of the market, 102. So if you're basically, below probably 600,000, there were 102 new, but 113 were absorbed. So more were purchased than came on the market. And then the bottom of the market is super hot. 114 new ones came on, 149. One, it is true that in any market, there are sub-markets within that market based on price range, location, and everything. Sure. Why are these, homes 400,000, call them 450 and below? Why are they selling a lot quicker than what's coming on the market? Why do you think that is?
Because more people can afford them. I mean, it's pretty straightforward. When you're looking at the whole market, you've got the people who can only afford these, but then the people who can afford everything above that, they can also afford these. So these homes at the bottom are getting purchased by both owner-occupants and investors. And as you go up in price point, you diminish the number of investors, and you're primarily owner-occupant and second homes.
I hear this all the time, and we'll just talk about the 2 highest parts. So call it everything, the top 2, everything above 600,000. Basically, for every house that came on the market, one was purchased. And I hear that, people can't afford the homes anymore. Like, nobody can afford the homes. Yet they're selling as fast as they're coming on the market, effectively. I mean, they're sitting on the market for a while. If you're underpriced or priced right, they sell faster. If you're overpriced, they can sit on the market a lot longer. So there are people that can actually afford a $600,000 home, because just in the last week, there were about 160 people who closed on a house that was 600 or more. That's pretty realistic. Here's the last thing we're going to talk about, because this is the other thing that we get a lot. Interest rates. Remember we were 7.5% a couple years ago? Well, we're actually, now these rates just came out. They're the most current rates that we got from a lender. 30-year fixed conforming, that's a Fannie Freddie, 6.5%, right? Jumbo 30-year fixed, actually less. So if you're buying a $1.3 million house, you get a better rate than a $700,000 house. 6.375. An FHA 30-year fixed, 5.99. Call it 6. VA 30-year fixed, 5.75. Those are not like sub 6%. Rates are good if you qualify. Now, you're not going to be able to buy the $700,000 house in Vegas on FHA unless you put like $400,000 or $300,000 down. 15-year fixed are going to be 15 years will be even less than all these, maybe half of a point less. So interest rates, probably not horrible. How do we look in Vegas, like from your bird's eye view, looking at the high end of the market, the low end of the market?
So, it's been a really interesting week. we've had a lot of showings in the past week. We've had more offers than we had the week before. So it's been an interesting week. Things just kind of bounce around. The buyers are still interested. Sellers are still willing to sell. It's just a matter of coming to terms with the price. And then, of course, it's, I say this a lot, but it is about the product too. It's the price and the product. So are these homes that people want to buy? Do they have what people are looking for? Are they located in the places that people want to live? Those are really important things to keep in mind. Every neighborhood is different. Every neighborhood has a different appeal. So real estate is hyper-local. It's very important that you look at that and you understand that, because you might say, oh, homes in my neighborhood are selling in less than a week, or you might say homes in my neighborhood are taking a long time to sell. Well, real estate is hyper-local, so it depends on a lot of different things.
My opinion of the first kind of quarter and second quarter so far have been, there's been a lot of uncertainty. I think that's driving people not to maybe make purchases. Could there be weakness going forward? Yeah. But then this came out today. Atlanta Fed GDP Now growth estimate for quarter two rises 4.6 from 3.8. So that's an annualized rate. Doesn't mean that GDP is going to grow 4.6 in one quarter. But they're, in all of the estimates, there's zero estimates right now. None of the major anythings are predicting a recession. Like right now, second quarter, third quarter, that's not in the cards. I know people were talking about that in the first quarter. There were some companies that had said, we don't predict a recession 2025, and then a couple said we're retracting that. Mm-hmm. But now we've got the Fed, one of the Feds, the Atlanta Fed, is saying they're estimating 4.6 GDP growth. Do you think if consumer and a lot of that's investment, it's not just spending, it's a lot of it, investment is starting to happen again. Do you think this is something that maybe in the fall people are like confident again and we get back to a healthy market? Because here's the thing, Wanda. Nationwide, home purchases are still only at 4 million a year. They're historically very low compared to where we should be, between 5 or 6 million. We should be there 5 or 6 million.
Right. I mean, there's a lot in the news, and there's a lot of noise, and even beyond that, even when you can sort of divine the signal out there, there are very few people who can actually understand what any of that means and the long-term repercussions. And you kind of talked about investment a little bit. There's a lot of investment coming in the country. And think about it this way. How many home dollars are invested when U.S. investors see foreign investment coming to the U.S.? I think that's one of the things to really keep in mind. All of that foreign investment coming in is also encouraging homegrown investors. And all of that means more innovation, more manufacturing, more building, more economic activity. And you're going to see probably the GDP surprise everyone to the good. And all of that means hopefully a good economy for all of us and opportunities for all of us. And that translates into housing in the sense that people will want to purchase a home, people will have money to purchase a home, and it will support home values. Home values don't need that sort of buoyancy because home values are already supported by 40% of the homes in the U.S. being owned free and clear. So there's a lot of support already. However, economic good news always helps all the boats rise, including real estate.
I mean, especially Las Vegas.
Yes.
Yeah.
All right. Anything else?
No, not really.
Okay. Well, that was fun. Leave us your real estate related comments. We appreciate you watching. Please remember to like the video, subscribe, hit the notification bell, share the video, and tell us what you think of the commercial-free viewing for 48 hours. If you see commercials during the first 48 hours, please leave us a message because that is not our intention. So we'll see what we can do about that. We'll see you on the next video. Bye.
Bye.